Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HKT Trust and HKT Limited annual report. And HKT Trust and HKT Limited provides a wide range of businesses and services to its customers. At the core of their operations are telecommunications services, which include voice and unified communications, data connectivity, and enterprise communications solutions. These services cater to both business and individual needs, offering features such as local business telephone services, international telephone services, cloud office and hosting, and broadband services. In addition to these core services, HKT Trust and HKT Limited also offers a variety of related services. These include mobility security, fixed mobile integration, collaboration, mobile business solutions, facility management services, merchant payment solutions, virtualization and cloud services, and call center outsourcing services. The company also provides various consumer-focused services, including home automation, home network, home entertainment, consumer electronics, and smart living online shop services. Furthermore, HKT Trust and HKT Limited offers a range of specialized services to cater to specific needs. These include audio-visual solutions, office solutions, data infrastructure, professional services and maintenance, video surveillance solutions, and payment solutions for banks. The company's comprehensive suite of services makes it a one-stop shop for customers seeking integrated telecommunications and related solutions. In summary, HKT Trust and HKT Limited provides a diverse range of businesses and services to its customers. These include telecommunications services, data connectivity, enterprise communications solutions, mobility security, facility management services, merchant payment solutions, virtualization and cloud services, call center outsourcing services, home automation, home network, home entertainment, consumer electronics, and smart living online shop services. HKT Trust and HKT Limited market capitalization of $93 billion is significantly larger than the average industry peer of roughly $10 billion. This shows that HKT Trust and HKT Limited holds a significant advantage in their industry. HKT Trust and HKT Limited trades at a higher price-to-earnings ratio of 18 times and a higher price-to-book ratio of 2.53 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 66% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.67%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, several key factors have contributed to the increase in revenue. Firstly, sustained momentum across core businesses has been a significant driver, with notable year-on-year growth in various sectors, such as 1,010 home premium solution customer base, 5G devices adoption, and roaming services. Additionally, the expansion of Now TV's customer base, driven by the OTT segment's 16% year-on-year growth, has also contributed to revenue growth. Furthermore, innovation and commitment to innovation have led to increased adoption of new technologies and services, resulting in higher revenue. The company's focus on strategic investments and organic growth has also yielded positive results. On the decline side, there are only two drivers mentioned in the report. Firstly, local telephony services have seen a decline of 10% due to migration from basic voice services to mobile and data services, as well as weakness in the small and medium-sized enterprise segment. Secondly, capital expenditure for HKT's mobile business was 4% lower due to efficiency gains from capacity upgrades and network maintenance. In summary, revenue growth is driven by sustained momentum across core businesses, strong growth in premium solution customer base, increased adoption of 5G devices, and expansion of Now TV's customer base. On the other hand, revenue decline is primarily attributed to migration from basic voice services to mobile and data services, as well as efficiency gains in capital expenditure for HKT's mobile business. The company is indeed generating positive operating cash flow. This can be confirmed through two key metrics: adjusted funds flow and net cash generated from operating activities. According to the financial reports, the company's adjusted funds flow has been steadily increasing over the years, reaching $6,199 million in 2025. Similarly, the net cash generated from operating activities also shows a positive trend, with a value of $11,628 million in 2025. These figures indicate that the company is generating sufficient cash flow to cover its operating expenses and investments. The confirmation of these metrics on page 53 and page 181 of the financial reports further supports this conclusion. Overall, the data suggests that the company is financially stable and capable of generating positive operating cash flow, which is a crucial indicator of its long-term sustainability. The company's debt level has undergone significant changes over the past year. Initially, there was no mention of any significant change in total debt level, page 58. However, subsequent pages revealed a gross debt increase of $3,027 million from $723 million to $44,750 million, page 59. Furthermore, short-term borrowings increased by $1,950 million, page 103, and total short-term borrowings rose from $3,934 million to $5,884 million, page 158. Despite these increases, there were also instances of debt reduction. For instance, borrowings decreased from $44,567 million to $41,306 million, page 182, only to increase again to $44,575 million, page 183. Additionally, short-term borrowings decreased from $0 to $3,934 million, page 185, and total debt increased from $0 to $71,892, page 187. In terms of interest expenses, the company has experienced a significant decrease. Net finance costs decreased by 23% to $720 million, page 58, while interest expenses decreased significantly by 14%, page 59. Furthermore, excluding interest on lease liabilities, interest expense decreased by $169 million, 12%, page 137, and total finance costs decreased by $529 million, 23%, page 137. The effective interest rates on borrowings have also decreased from 2024 to 2025, page 193. Overall, while the company's debt level has fluctuated, its interest expenses have consistently decreased over the past year. The performance of various segments and regions in the company has been mixed. On a positive note, the mobile segment saw significant growth with a 30% increase in revenue to $3,537 million and an impressive EBITDA margin of 61%. The Telecommunications Services (TSS) segment also performed well, with a 2.4% increase in revenue and a 2.6% increase in EBITDA. In the mobile segment, revenue increased by 10.8% to $12.694 billion, while EBITDA saw a 5.1% increase to $5,568 million. These results demonstrate strong growth in these areas. On the other hand, other businesses experienced relatively stable revenue, but a decrease in EBITDA from -$1,100 million to -$1,055 million. Hong Kong's non-current assets increased by $566 million, but specific revenue or EBITDA information for this region is not provided. Overall, while some segments and regions showed improvement, others struggled with stagnant or declining performance. Management is optimistic about the company's future performance, expecting an even better outcome in 2026. They plan to drive digital transformation through the adoption of AI applications, expand fiber coverage, and upgrade customers to high-speed home broadband services. The group will continue to innovate and explore new business opportunities on various technology platforms and geographical locations. To achieve this vision, management is focusing on consolidating its leading position in the premium customer segment by upgrading high-bandwidth services and investing in cloud computing, data analytics, and artificial intelligence technologies. They are also reshaping workflows and network management through AI deployment to enhance operating efficiency and cost optimization. Furthermore, HKT will continue to invest in building digital capabilities to support existing businesses and enable growth in new areas, while considering prevailing market conditions. Additionally, the company is investing in virtual banking services through associates, with a focus on growing its interest in this area. Despite these plans, management acknowledges that actual results may differ due to various risks and uncertainties. Nevertheless, they remain confident in the company's prospects, driven by their commitment to innovation and digital transformation. The company has a history of paying out dividends to its shareholders. According to the provided information, in 2024, the company declared and paid a total of HK $5,861 million in dividends. This amount comprised both interim and final dividend payments. The confirmation on page 105 further solidifies that this entire sum was indeed paid as dividends for the year 2024. The company's inventory management has raised some concerns. The data shows that the cost of fulfilling orders increased from 2024 to 2025, indicating potential issues with managing stock levels. Furthermore, the cost of inventory sold also rose significantly during this period, from HK $1,172 million in 2024 to H $9,612 million in 2025. However, it's worth noting that the company actually decreased its inventory levels in both years, which may suggest efforts to mitigate these issues. Nonetheless, the increase in fulfillment costs and inventory costs suggests that there are concerns about inventory buildup. That concludes the financial summary for HKT Trust and HKT Limited. Feel free to comment below, and I will be happy to answer them when possible.